morning. It is Friday, January 10th. It is snow here in Atlanta. We've got probably about 3-4 inches, I would say, and it stopped snowing, but it's kind of like a winter wonderland. Got a lot to go over today. We're going to go over the payroll numbers, obviously. I'm going to go on a rant about somebody who complained that I don't do 6 free podcasts a day anymore, a week, I'm sorry. I got a rant. If you want to invest in SpaceX, there's a new ETF out there that's actually doing pretty well. A new Trendspider indicator that might be of help. Wednesday Seeking Alpha presentations were really good. I liked them. We'll kind of go over that. Shep asked about how many losers Alpha Pix has. So I did the math on that one. Steve's Tops 10 presentation was really good. I will go over all of that. They went over how the quant is calculated, how the quant performs. And his first pick, by the way, was up 10% when he actually announced it. So there were tons of people listening. If you don't have Seeking Alpha and you want to know a top list, Dan Niles has top 5 for him. We'll talk about the fires in California, about insurers, and then earnings killed it with Walgreens, Taiwan Semi, and Delta. And then we'll go over the scans. So let's look at the Qs. First off, I will tell you, payroll numbers swell more than consensus in December. The economy's good. The initial estimates were revised down from 212 from 227. It came in at 256. So just understand and think in your head about this. The jobs number, we created more jobs, which should be very good. Okay. So why did the markets collapse? And why did they go down? Because we're in, and old listeners will remember, in the 2022 era where the market was going down, we were in a situation where good news was bad and bad news was good. This one, the good jobs market, good news is now bad news. And why? Because if you go and take a look at the market data and you look at the 10-year shot up. Okay, we can look at the 10-year bond. I think I don't know if it's going to tell us after hours. I don't think it's going to, but the last day, there it is, right there. See that shoot up from 4.7 to 4.8? That's the assumption that we have no more rates. There's an old saying, don't fight the Fed. This is what happened, and the markets tanked. So if we look at QQQ, we're down 0.85%. Okay, they seem to be coming back a little bit. If we just look at this one and go a 5-minute after hours, see that drop right there at 8:30? That's the job market. Now we're coming back. We're coming back. Do I expect this to be good news for the market? No. I expect you to see chop. We talked about it. The algorithm got you in at 525 here, and it got you out, just this morning. Well, yeah, it looks like that. At with a 1.9% loss. Am I getting out? No. The reason is because QQQ is a long-term buy and hold for me. And that's it. When the payrolls swell like they did, and again, good news is bad news, then you want to be a little bit careful in the market. So am I pouring money into the market? No. Am I picking and choosing my battles? Yes. Am I identifying what type of investment that is when I buy it? Is it a buy and hold? Is it a trade? Is it a short-term trade? Is it a long-term trade? I'm identifying all of those things before I get in. So if you do that, you should be fine long-term. And remember, I am 100% a long-term buy and hold fan because I still have Apple shares that I bought in 2006. Okay? That is what Warren Buffett calls, we talked about it before. If you can just see through the trees, and even if you bought, remember there's a long time pod favorite where Bob, and you can just Google it, but Bob buys at the absolute top of the market for his 30 years of investment, 40 years of investment, still retires a millionaire. And the reason is because when you pull out on this market, and we look at a weekly, we'll even go back and look at a monthly. Look, do you even see today's or the last week pull back on this? No. Is on a monthly, is the market extended? Absolutely. When was the last time it was extended? When the Fed started raising rates. And that's what the market is fearing right now, raising rates. So let me start the podcast right now with a little bit complaint yesterday. So I put out a podcast and a newsletter yesterday. The markets were closed. The markets weren't open. The newsletter is actually, what if I lost everything and I had to start over? How would I... Excuse me. Sorry about that noise. It is a killer theme song, by the way, because sign up for the newsletter. Let us help you grow. I don't know who us is, but this is the newsletter yesterday. And it's a 5-week process of, if you had to learn everything, how would I go and do it? I lost my memory. I lost my portfolio. I lost everything. How would I go and do it? And it was a simple newsletter. Somebody on Spotify complained, they will remain nameless, about, do I have to pay now for podcasts? Well, douche. Okay, let me put it to you this way. For the last 4 years, I started in January of 2021. I did some podcasts in 2020, but January 2021, I've been doing 5 to 6, sometimes 7 podcasts a week, okay, for free. Handing them out, doing them for free. And then last year, I decided to start a newsletter because the charts were good to share, and a newsletter done. And I accidentally hit, hey, charge these subscribers, because they were trying to support me. And they said, okay, those subscribers, none of them asked for a refund when I did that. I said, hey, I accidentally did this. If you want a refund, go ahead. Everybody supported me. So here's the thing. Complaining that you're not getting a podcast when the market is closed is, going in. I mean, come on, get off my back, man. I got hundreds of people who pay me, and I'm trying to provide them value. I'm not trying to take anything away from you. If you're going to make a comment like that, step back from the computer. Okay, this goes for any nasty comment that you put online. The world would be a better place if you just stepped back from your computer and thought through it. I am not taking anything away from you. I am not asking you to pay for the podcast. I am simply trying to provide value for those people that are supporting the podcast. If you're not one, don't worry about it. I'm still giving you fantastic content. So, douchebag, here's my suggestion. You want to comment about how much money you're making? Maybe support those that are giving you great tips, that are providing A+ content. My belief is, and yeah, I'm getting angry. I'm going to step back away. Namaste, motherfucker. Namaste. Yeah, I'm getting laughs in the background. Let's talk about some stuff. And FYI, just if you want to stop listening, there's a portion of this podcast that will be paid as well. So those that support me and those that pay for the newsletter will get an additional portion of the podcast. But I will give you great content for the minutes that I'm doing it for free. It will be up there on Spotify. It will be on Apple Podcasts. It will be on YouTube for free. And then you can go over to Substack and watch the rest of it, commercial free, if you want to support. And I give free trials. It's not like I'm saying, hey, if there's something you don't want to, something that you want to listen to, you can't for free. There's free trials up there. Rant over. Namaste, motherfucker. Namaste. Tom Lee discusses quantum computing as a small caps. He mentioned IONQ. So, yeah, he mentions mentioning RGTI, QBTS, QT. These took a 50% hit. Am I telling you to go into these? No, I'm not. Understand, with quantum computing, and I think I did a good job on Wednesday talking about it. Quantum computing, the reason these all came down is because Jensen Huang came out and said we're 15 years in a good sense, but we're more realistically 30 years away from quantum computing being a reality. That caused these to crash, absolutely crash by 50%. Okay, 50%. You can see RGTI right here just crashed, absolutely crashed. So if you were in these, hopefully you got into them at $1.60, because right now RGTI is trading at $9.75. And even though it came from 20 down to $9.75, you're still making a fantastic gain. Okay. If you had the 4-hour algorithm, If you got in at $1, now if you bought at 20, shame on you. This stock is not making money. It is not making money. It is an obvious trade. You want to know what I'm investing in for quantum computing? A company that is making money. You have plenty of choices. My choice for quantum computing, Google. Google. They put out the press release that made all of those little small companies make a ton of gains. Okay, so I'm in Google. And if you want to follow Tom Lee, go and listen to this. You can follow Tom Lee. His granny shots, he's got IONQ in his granny shots ETF. So now, say you want to invest in, SpaceX. Well, it's a private company, you say, Gary. Well, it can't. XOVR, their top 10 holdings, their number one, SpaceX, AppLovin, Alphabet, NVIDIA, Meta, Salesforce, Oracle. Go and look at it. XOVR. And by the way, while you're looking at it, notice it's got a nice dip. I mean, it's got a very nice dip on a weekly chart here. You got a nice dip with a golden cross of the 50-day up on the 200-day. And when it IPO'd and it came out, it was 26. You're trading at 18 right now. So if you want to invest in SpaceX and you can see the volume picking up, this might be one that you want. Now, so right there. Now, Trendspider has a new indicator imported here, PE ratio. You can import it into your setup and you can see, this is why I love Amazon. This is why I poured more money into Amazon, is because look at the stock price on this weekly chart and then look at how cheap it is historically. Look at how cheap it is historically. So I like stocks like that. It's just one that I want to look at. Okay, Wednesday Seeking Alpha presentation, it was the top stocks, okay? It's this presentation. If you want to go and read about it, if you have Trendspider, if you have Seeking Alpha, it is the top stocks for 2025. It is unbelievable. The top 10 stocks for 2024 are up 125% versus the S&P 25%. Includes AppLovin, Celestica, Modine. Okay, the presentation was fantastic. I will tell you, the first presentation I liked. Eli in our Substack group, he said he wasn't super happy with the first one. He liked the second one about shipping. I was the complete opposite. So it shows you yin yang, tomato, potato, whatever you want to call stuff, whatever you want to look. It is different for every person. So the entire presentation is up there. You can watch the webinar for free. The guy he was talking about using TQQQ and SQQQ to hedge and to play both sides of the market. He suggested using margin to hedge. I would never use margin. He also said last month he sold out of every single stock position he had in order to focus on indexes and sectors. We were at an all-time high, if you remember. You look at QQQ, probably a great strategy. You know, if he sold out in December up here at 534 on the individual stocks, he probably did really well because the Mag 7 was what really held up the market in December. So he uses TQQQ. Again, remember, if you've got too many positions in your portfolio, it's not easy to manage. And that's what he was saying. Make sure you are focused. One of the positions that I have, and it's like 40 stocks now, is Alpha Picks. And Shep on Spotify asked me, how many losers has Alpha Pick had in their list over the past 3 years? I can't imagine it's 100% win rate. No, it's not. It's not. So I went back and I counted. Of the 26 closed positions in the history of Alpha Pick's portfolio, 10 of them were losers. So that means they closed 16 positions in the green. Okay, a fantastic win rate. Out of the 40 current positions, 10 are negative. Again, 30 are positive. A fantastic win rate. You could have a win rate of 10% in a portfolio and still make money. Okay, and it could still beat the S&P if you have the right stocks. So it's not about winners and losers. It's about the portfolio return. Since its inception, AlphaPix has made 165%. The S&P, you would be perfectly happy making 56% by just buying VOO. That's what this is. This is a new stock on the 1st and the 15th of every month, and they tell you when to sell. It is a data-driven portfolio that is rules-based. They don't use charts. They use the quant system in Seeking Alpha. And so if you watch Steve Kress, his top 10 stocks, it was a fantastic, fantastic show of how to use the platform. And so if you go over here and you just look at these top stocks, again, this is why I like AlphaPix. I think 4 of the top 10 for this year are actually in the AlphaPix portfolio. So if you want AlphaPix, you go over to Linktree, linktr.ee, and you can click on this fourth link right here, AlphaPix. Want to beat the S&P? You can save $50. And it is a fantastic, fantastic portfolio. Okay, if you want to choose your own, you can get Seeking Alpha. You can get a free 7-day trial. Go and look at the top 10 stocks with your free 7-day trial. Sign up at Linktree, linktr.ee. You can get that for $30 off, okay, and a free 7-day trial. My suggestion for the quote-unquote Gary bundle is the Premium and AlphaPix bundle, okay? You save $159 off your subscription. It is a fantastic way to actually make money in the new year. I like doing my own research. I like looking at my own portfolio. I also like getting those AlphaPix. And if you remember, if you're an OG, I spent 8 months picking and choosing which AlphaPix I wanted to buy in a portfolio. I didn't beat AlphaPix. I consider myself a very advanced investor. I didn't beat them. I'll give you a great example. Sprouts Farmers Market. It's in AlphaPix. I didn't believe that this stock was going to be as good as it was. I shop at Sprouts Farmers Market. No way I thought this was going to be good. They bought early last year, way back here. See that stock chart? You may be upset at this little ding from 43%, and you can use the 4-hour algorithm. If you want to use Seeking Alpha's AlphaPix and the 4-hour algorithm, get Trendspider, okay? Because you can see Sprouts Farmers Market, you have an opportunity to get out each time, and you have an opportunity to get back in. See how it got you out at the 43% gain, and it gets you right back in, right when the MACD resets. But this is a stock I didn't even buy when they said, hey, you should choose it. And I think it was around $40 or $50. So if you want Trendspider, go and click this top link, and you can save today 63%. I steer people towards this advanced tier. I don't know how much longer this is going to go. They don't even have a countdown on this, but the deal will go. So while it's there, click you can choose whichever one you want. You can save 7%. By the way, I'll tell you too, there is a monthly savings as well. If you want to choose monthly, I would never choose monthly. But if you want to choose monthly, it is quite expensive. I would rather pay for the yearly because I do not think that you are going to actually learn enough about this tool in 1 month. Now, the advanced tier comes with unlimited one-on-one training. So it's $909. Think about this, at $82 per month. Think about taking 2 training courses for the tool, okay? 2 training courses per month, you're paying about $41 per training course, and you get the tool for free. That's the way. That's why I steer people towards the advanced. Now, you have to pay all for it all up front, but the enhanced tier comes with 1 free one-on-one training, and that's $58 a month. And you can use all of these tools to, again, Sprouts Farmers Market's a good example. So Steve's top 10 was great. He showed off, by the way, I'll tell you, he showed off his favorite stock screener. If you go down here on the left-hand side and you go to stock screeners, it's stocks by quant. And you can customize this, okay? That's his favorite screener. I thought that was interesting. They also went over how the quant is actually calculated, what they do every night, and the virtual analyst reports that come up. If you just let's pull up RGTI, which is a quantum stock. You can pull up the virtual analyst report. It will tell you everything you want to know about this, the competitors, the unique value that it has, Seeking Alpha's quant rating about the valuation, growth, profitability, momentum, and revisions, the positive raised by analysts, the concerns raised by analysts, and everything that you want to know about it. Okay, these are updated every night for every stock that it covers. And our GTI, which was down 45%, it's still a strong buy. Okay, now the top 10 stocks presentation that he did, this was interesting. He presented his first pick, OPFI, OPFI. It was up 10% on a 1 minute chart. Okay, it was up 10% when he announced it. That means that it was just, you know, it was announced and there were a lot of people. Let's look at it. OPFI, FI, there it is, OPFI. And when you look at it, what I found interesting was it's number 2 in the quant, okay, in semiconductors. I found this interesting because, it's not it's consumer finance. Yeah. This is what I said. The number one choice, the number one stock for the year, I found it interesting that it's actually number 2 in semiconductors. Number 1 is RGTI and a higher quant rating. And number 3 is the core portfolio, Taiwan Semi. So if you don't want the seeking alpha, but you want a good set of stocks for the new year, here you go. Top 5 stock picks from Dan Niles. Okay. As a reminder, my top 5 picks coming into 2024 had a skew in defense, offense and defense. They were Amazon, Meta, TXN, XBI, and KWeb. So he did okay. His top 5 for defense and offense this year, cash. He has a fantastic, he thinks cash is really good to have. Cisco, KBWB, IJJ, and ADTN. So he's got those. Now, for the rest of the podcast, you'll have to tune into Substack. I'm doing the same thing that I did yesterday, which I just gave you 21 minutes of absolute gold, Jerry. It's gold, Jerry. As Bannon says, what is it, Kenny Banya? It's gold, Jerry. Ovaltine, it's gold. So, but you'll have to tune over to Substack. Just remember, it's at about 22 minutes. You guys have a great weekend. This weekend, by the way, on the paid newsletter, I will be going over those top 10 stocks that Steve Kress goes over. So the top stocks of 2025, I will be giving you charts. I will giving you my strategy. I will be giving you everything. And coming to the newsletter at some point in time over the next week is my own personal, I'm going to put up the portfolio of the daily stock pick. I'm going to pick 10 stocks. And 10 stocks and ETFs. I'm going to put them into a portfolio. If you're a paid member of the newsletter, we're going to have them in Savvy Trader. And we're going to keep track. So let's see if I can beat the S&P like the core portfolio does, except this one's going to be managed. So you can follow the core portfolio for free. Okay, Savvy Trader right down here. Follow my trades for free on Linktree. You can go over and you can see the daily stock pick core portfolio. It's 34 positions. And if you just compare it, this is my mic drop moment. Go over to QQQ and you go max. I'm still beating QQQ. The NASDAQ for, since July 2023, June 19, 2023, when I started this core portfolio, I'm up, the core portfolio is up 50% and the NASDAQ is up 10%. And you might say, well, SPY's up more than that. No, it's not. SPY VOO is up 34%. I'm up 50%. So I am beating it. And this isn't a managed portfolio. The way the core portfolio works is it's just 100 shares of each individual stock. That's it. It's not, there's nothing that is different about this. It's 100 shares of each stock. So that's it. And you can see total, I've got Berkshire, which is at a loss. I've got Pepsi, which is at a loss. I've got Coke at a loss. And I've got Cleveland Cliffs at a loss. Cleveland Cliffs probably needs to come out of there, to be honest with you. But I like the exposure to the materials sector. And it's not because of the dollar price of the actual stock. It was not a huge allocation to this. So it's $1 million portfolio. So, but you could buy, I would never tell anybody to buy an equal weight 100 shares of each one of these. I would tell people to weight your winners and add to your winners and cut your losers. With that, we're going over to Substack at 25 minutes. So I will talk to you guys Monday, unless you're a paid subscriber. And then, if you're a paid subscriber, you get it. If you're not, poo-hoo. Bye-bye. Namaste, motherfucker.
Every morning I wake up to the sound of the trading bell. My heart account.